Let's welcome them on board, Sandip Sabharwal, and talk to him about what he's making of the market right now. Sandip, hi, afternoon. Good to have you on the show as always. Sandip, surprised by the market's reaction to TCS or HCL Technologies numbers, the move that you're seeing on IT today?
Aisha, this happens every time because people are inherently bullish on technology stocks, especially the retail investor community as well as a large swath of fund managers. So what we have been seeing over the last 2, 3 quarters is that every time results come out, there tends to be a worse is over kind of buying which happens in this sector. And then as the quarter plays on and people realize that the worst is actually not over, then these stocks give up gains. So I would think that a similar phenomena could repeat going forward because the outlook for most of these companies has not improved, it's actually deteriorated. And for this year, most of the large IT companies will have earnings which will be -5 to +5% of last year's earnings. And valuations are around 20 to 25 times for most of them. So I think it's tough to make a case to buy right now. So it will be tough for this move to get built into any sustainable big up move. So they might just hold on because finally they are cash generating companies with no debt. So to that extent, the risk in terms of overall risk in these stocks tends to be low, but the outlook is still very hazy.
In the near term, Sandeep, you think today's uptick should be sold into because the stocks have also recovered quite a fair bit from the last quarter when the performance and the earnings were way worse.
Yeah, so for those who own technology stocks as a big part of their overall portfolio, obviously they could trim. But for if you have some exposure which is much lower than the overall market index exposure, etc., you can just hold on. So because uh, even the downside of these companies might not be more than 10, 12%, and the upside won't be more than 5, 10%. So I think that's how I see this sector right now.
Okay, just the important flashes for you at the bottom of the screen. Look at that fall as far as the small cap index is concerned, 1.7%. So it's not just a very small number at that. There's almost a 2% cut from the highest point of the trading session as far as the small cap index is concerned. In absolute terms, down about 117 points. But Kunal, I wanted to flag out some of the stocks which are actually holding on to the all-time high levels. Case in point being Tejas Networks, which is higher by 15%. You have Phoenix Mills, which is up around 5%, and Metro Brands 2 is perking up with a gain of 4%. Any calls?
So, Tejas Network, I think it's a good time to try and look to exit the stock because after a major amount of consolidation, the stock has come back into a deep overbought territory on the chart. So, I think looking at the divergence from the 200 DMA, this seems to be a stock which has now gotten to an extreme. I would expect a cool off of sorts for Tejas Network. Even for the likes of Phoenix Limited, for example, that stock has come back into a breakout mode. 1630.35 was the breakout for Phoenix. The stock went up to a 1700 mark today, but now again it's pulled off back towards the 1630.40 levels. Metro Brand is the only stock which I believe looks to be an attractive bet because of the calibrated move the stock has seen in the last 1 month, 3 months, and as well as over the last 6 months. I think 3 month back the stock made a low which was around 840, gradually formed a pattern of high highs and high lows, and is now at 1060-70 levels. So that's the stock which looks fairly attractive and will continue to hold on with a potential target close to 1140 over the very near term.
Sandeep, why this disappointment on Federal Bank and way ahead of its earnings? I mean, the NIS was slightly below, the PAT was below, asset quality was in line, but was the market only anticipating weak numbers and selling off before the event?
Sorry, I have no idea. I'm not looking at the stock at all.
Okay, take that. Since we're talking about banks, let me now take it across and get you some of the buzz on South Indian Bank this time around. And we understand from sources that there is a search on for a new MD and CEO, and that may have actually come to an end. Sharad is here with more updates on the same. Sharad, what are you picking up from your sources?
Well, yes, in focus we are having South Indian Bank, and what we are picking up from our sources is that South Indian Bank's search committee likely to have recommended Shalini Warrior as the MD and the CEO of the bank. Now do remember, she is currently the Executive Director of Federal Bank, and also she has served as a COO, which is the Chief Operating Officer, from the years 2015 to 2020. Now South Indian Bank has actually submitted a list of candidates, and that also includes the name of Shalini Warrior to RBI. And going ahead, the RBI's final approval is awaited on the candidates chosen by the South Indian Bank as the MD and CEO. Now, looking at South Indian Bank, they are searching for the new MD after Murli Ramakrishnan had asked his consideration not for an extension going ahead. And for both the banks, Federal Bank as well as South Indian Bank, they did not respond to the queries sent by ET now. Now, of course, looking at South Indian Bank, the stock reaction also, that is up almost 3 times if you see over the last 1 year.
Interesting one at that. South India Bank hunting for its new leader, and let's see which the exact candidates are and when we hear finally with respect to who the new chief is. But shifting focus to what else is happening in the market, and it's Zomato as well as PB Fintech, which is perking up quite a bit. Sandeep, do you track either of these names, and are you at all positive about these?
Not at these prices, like TB Fintech, obviously not, because I don't think they have any sustainable business model. Zomato, of course, is a company which has a sustainable model, and it operates in a duopoly. So I was of the view we should buy this at 50, 55, but I never ended up buying, and now it's gone up to 80. So I'm not looking to buy at 80 because I think at 80 it factors in most of the positives which could play out over the next 1 or 2 years. So we'll need to see how the next couple of quarter results come out and then evaluate whether to buy this stock or not.
Okay, so that's the take coming in as far as some of these new age tech companies are concerned. What else is passing on good amount of volumes is Prestige. Of course, there was a large block that happened there, as well as the entire news flow. Within the realty pack itself, Naresh, which is the counter that looks the strongest to you? And would you buy the dip on Prestige today?
So it was just a interim dip for the day, and I would still wait out because there has been huge volumes, a lot of speculative activity today. The delivery volumes would be pretty low, but unless it goes back to that 520, 530 mark, which is where it broke out from, which was the low done today, that is the only price point where it becomes a lot more sensible. The only stock which actually looks interesting is Kolte Patil, because that stock has not done anything for the last 1 year. Try to make that breakout move about 380 again. The last breakout point is 350, so that is the price point you want to enter. And DLF has been the strongest one, which would look interesting if it dips back to 460, 470 levels. So waiting for a much larger dip to actually participate.
Okay. Tesla, and we understand from our sources that the Elon Musk company is in talks with the Indian government to actually set up a factory with up to 500,000 annual capacity, and guess what? A price as low as 20 lakh rupees for a Tesla car. Now, this is something really out of the extraordinary, custom-made, made-in-India car, and affordable one at that. In fact, let me take it across to Sumit Chaturvedi, my colleague, who's picking up more on this from his sources. Sumit?
Billionaire Elon Musk-owned Tesla has ambitious plans for India. This time, it's planning to have a capacity of 500,000, 500,000 cars this time in India. Well, it's a huge capacity considering its electric car maker. Also, what it plans to do is to launch a car worth just 20 lakh rupees. Remember, it will be then the cheapest car of Tesla in India and the world. It's coming close on the heels of companies like Hero Harley coming with affordable Harley. So Tesla will come with an affordable Tesla for India. That's the plan, what electric car maker has discussed with the government. Sources have told us that Tesla is very serious this time, and Indian government is also serious to bring Tesla to Indian shores, and that's why a huge plan has been discussed, and it's going to get a green signal from the authorities concerned and government whenever it's put in a formal way. As far as Tesla's plans are concerned, it's clearly want to not only depend on China for Asian manufacturing. India can be a big base as well. Also, to put into perspective, 5 lakh capacity of Tesla is going to be the third largest in India. So far, if you look at Maruti and Hyundai are the only two car makers that have capacity more than this. And other luxury car makers like Mercedes, Audi, BMW, they manufacture around 20,000 cars in India. So Tesla will be huge as compared to all of them. This time it looks it's quite serious. Well, as Elon Musk, the owner for Tesla, he met PM Modi in June in US, and that time he has said he's a big fan of PM Modi, who wants him to come to India, and he's also quite serious about it. The company is scouting for land in India and will be finalized by the year end. So it looks like this time Tesla is very serious about its India drive, and it will be unique and not very common drive.
Okay, so that's the take coming in. Tesla coming to India. Sandeep, what do you make of this one? Do you think it could be a serious contender to the other EV makers, the likes of Tata Motors as well as M&M? Okay, Sandeep is not with us, but let me toss that question to Naresh to just get a chart check going on a couple of these companies. Tata Motors and M&M?
So Tata Motors, M&M both need a little bit of a pause. It has been a one-way rally. So Tata Motors broke out at 460, then broke out at 530, and we've gone to 630. We've gone to an all-time high. And this was the high roughly back in 2015, 2016. So generally, we do not see a runaway rally when multi-year high has come. You need some bit of a pause. So expecting it to fade off going forward. So not very gung-ho. Same is the case with Mahindra and Mahindra. Being a leader, the last high was 1400, went up to 1600. So the recent move is a little overdone. So my view is there could be a shift in terms of leadership here. Ashok Leyland looks more promising because that's the one which has consolidated for a year. So time to expect a pause in M&M as well as Tata Motors.
Okay, let's on that note get in some closing strategies as well. Naresh?
So that would be a buy on BHEL, which has corrected from the top. In the last today's session at 91.92 looks like a retest of the breakout. A small stop loss at 90 and expecting a bounce here.
Right. Kunal, what about your closing ideas?
Well, I'll go a bit defensive, and Glenmark Pharma is something which I would look to trade at current levels of 675, 680 approximately where it's trading right now.
Okay, on that note, take a quick break, and it seems like just after hitting that all-time peak, the markets have reversed, and how? And you know, it really seems that it's only an hour market problem alone, because the rest of the globe is actually holding out well in the green. Asia closed in with fabulous gains after a very strong handover from the US equity markets. Europe is actually holding out very well as well. And same is the case for US futures. They're seeing actually a follow through from gains overnight as well. But our markets, yes, they've taken quite a tumble actually from the peak, almost 1% now on the Nifty, and more so for the broader end of the market. We'll take a very quick break on that note.